corporate debt markets are crucial for the infrastructure sector. Given the need to further deepen bond markets, a number of measures are proposed to be taken up. To deepen the corporate tripartite repo market in corporate debt securities, Government will work with regulators, the RBI and the SEBI, to enable stock exchanges to allow AA-rated bonds as collaterals. User-friendliness of trading platforms for corporate bonds will be reviewed, including issues arising out of capping of International Security Identification Number, the ISIN. It's right time to consider increasing minimum public shareholding in the listed companies. I have asked SEBI to consider raising the current threshold of 25% to 35%. As a key source of capital to the Indian economy, it is important to ensure a harmonized and hassle-free investment experience for foreign portfolio investors. Hence, it is proposed to rationalize and streamline the existing Know Your Customer, the KYC norms for FPIs to make it more investor-friendly without compromising the integrity of cross-border capital inflows. It is time to take our capital markets closer to the masses and meet various social welfare objectives related to inclusive growth and financial inclusion. I propose to initiate steps towards creating an electronic fundraising platform, a social stock exchange, under the regulatory ambit of Securities and Exchange Board of India, the SEBI, for listing social enterprises and voluntary organizations. For listing social enterprises and voluntary organizations working for the realization of a social welfare objective so that they can raise capital as equity, debt, or as units like a mutual fund. It is important to get retail investors to invest in treasury bills and securities issued by the government. Efforts made by the Reserve Bank will need to be supplemented with further institutional development using stock exchanges. For this purpose, interoperability of RBI depositories and SEBI depositories would be necessary to bring about seamless transfer of treasury bills and government securities between RBI and depository ledgers, and for enabling this, the government will take up necessary measures in this regard in consultation with RBI and the SEBI. FDI inflows into India have remained robust despite global headwinds. Speaker, sir, global foreign direct investment flows slid by 13% in 2018 to $1.3 trillion from $1.5 trillion in the previous year, the third consecutive annual decline according to the UNCTAD's UNCTAD's World Investment Report in 2019. This is India's FDI flows in 2018-19 remained strong. If that was the global picture, India's inflows in 18-19 remained strong at $64.37 billion, marking a 6% growth over the previous year. I propose to further consolidate, Speaker, sir, the gains in order to make India a more attractive FDI destination.